Are you also confused on where to invest your money? Do you also keep thinking about how to invest, where to invest, and things like, am I saving my money the right way? Are my savings or investments really growing? Am I able to beat inflation at least? No worries. We are there to help you as we know these are the right questions to think about. So, hi guys. This video is for educational purposes, but we would like to share our knowledge and insights on all the questions that you've been asking yourself as far as investing is concerned. So, I'll just start by sharing a little about me. When I look at myself a few years back, I too went through the same confusion and started thinking on how do I invest my money the right way. Are the traditional ways of savings, like fixed deposit or investing in gold, the right thing to do? Should I consider investing in equities and other financial instruments? And then I started reading and learning about the stock market, about different financial instruments, and a lot of other things, which now I would want to share gradually and step by step through my videos because our goal is to create financial independence for ourselves and also share our knowledge, which is gathered after 1,000 plus hours of research and learning in last 5 years and with personal experience of investing. So let's look at some interesting facts on how in India people usually save or invest their money. So majority of Indian savings or investments are either in real estate or fixed deposits or gold investments, with equity investments, which include stocks or mutual funds, is only 4.8% even today. While this number has improved over a period of last few years, it is still very low compared to other assets like fixed deposits or gold, which is 15% or more. When we compare the percentage households investing in equities or stock market in India versus other major economies of the world like USA, UK, or China, India is only at 3%, which means only 3% households in India invest in equities, whereas countries like US or UK have a much higher percentage, which is almost 10 times. Even compared to China, which is comparable in terms of population to India, the percentage households investing in stock market is 13%, which is 4 times more than India. So Indian stock market has still a long way to go. And you are aware that in last few years, India has emerged as one of the global superpowers with India GDP at $3.2 trillion, dollars, almost coming closer to the fifth spot worldwide with India's GDP being equal to UK. And as per previous economic surveys and projections of India's growth in next 5 to 6 years, we will become the third largest economy by hopefully 2030 or maybe even earlier. Even in terms of GDP growth, India is one of the fastest growing economies amongst top 10 countries across the world. So, this all indicates a great decade and strong growth story for India and Indian stock markets in next few years to come. And I believe we should all be a part of India's growth journey to become a global superpower and also grow along. And now, as we have seen that the current contribution of investments in stock market in India is only 4.8% by value and just 3% when we talk about number of households in India versus gold, which is 15% by value. Let's also do a comparison between average returns of stock market and gold. So we compare 10 years rolling returns for both gold and stock market in last 25 years in India, as rolling returns are the most stable and accurate way of looking at returns over a long period of time. Also, if you would like to know more about how rolling returns are calculated, please share your comments and we can make a separate video on that. So, on comparing the returns data, we found out that stock market has given an average return of at least 12% or more than 12% at least 18 times in last 25 years. But same data for gold indicates that returns of gold have been much lower, with only 6 times in 25 years gold has given 12% returns compared to stock market which has given 12% or more returns at least 18 times in last 25 years. So the stock market investments have grown much more compared to gold investments. Let's also look at this with an example. So let's say you invested 1 lakh each in gold, in fixed deposit, and in Nifty, which is the stock market index for 20 years, starting the year 2001. Then you would have got 16 lakh rupees at the end of 20 years in stock market, while only 10 lakh rupees in gold and just a little over 4 lakh rupees in fixed deposits. Also, if we look at 10-year rolling returns of gold for last 30 plus years from 1989 to 2022, we see that gold returns are constantly coming down in last few years with latest returns of only 3.4%. So this all shows that stock markets have always outperformed other assets like gold or fixed deposit returns multiple times in last many years. And in the recent time of last 1 year too, returns of stock market continue to be very strong with Nifty giving 16% plus returns in last 12 months. So now we have seen different data points to prove why we should invest in stock markets or equity linked mutual funds, as they are much better assets for growing your money faster, and there is a lot of headroom for growth in India in years to come. In the end, I just want to share that not only investing in stock markets and mutual funds important, but also the duration of time for which one should stay invested is also very important. And let me show you that in three different scenarios. So let's say there were three childhood friends who graduated 25 years back and started earning, and one of those friends, Mr. A, invested 10,000 rupees monthly in stock markets for 25 years. The second friend, Mr. B, realized the importance of investing in stocks a little late and invested double the amount monthly of rupees 20,000 for 15 years. And the third friend, Mr. C, started investing even later and invested three times the amount of 30,000 monthly for 10 years to catch up with his friends. And all the three of them got 12% yearly returns, which is a very proven stock market return rate of last many years, as we saw some time back. Now you would be surprised to know that all three of them had very different value of money with them at the end of the investment period, with Mr. C, who invested the maximum monthly amount of 30,000 but only for 10 years, had 70 lakhs in his account with 36 lakhs of total investment, while Mr. B had 1 crore with same 36 lakhs investment, but he invested for 15 years, and Mr. A had the maximum value of 1.9 crores with only 30 lakhs of investment, as he invested for 25 years with a monthly SIP of only 10,000. So at the end, Mr. A was the richest of them all. This example clearly indicates the power of compounding and that staying invested for longer period of time has much more value than short periods. So investing in stock markets and investing with monthly SIPs for long durations can help you generate a much bigger corpus and amount of money. So it is extremely important to start investing in equity assets and for longer durations. Hope this video helped you, and we would see you start investing soon and share this knowledge with your loved ones as well. In next videos, we will also share more information and understanding on how to invest in mutual funds, stocks, and various other insights to enable as much as information as possible from our side and keep sharing our knowledge with all of you. Till then, take care of yourself and your families and keep investing and growing. If you've liked this video, please do subscribe to our channel and stay tuned for more such content. Happy investing and thank you.